The April-Jan fiscal deficit numbers are out. They stand at 6.77 lakh crore rupees. That's at 11.37% of the FY18 target. And Nikunj, this is something that the market is definitely going to take note of.
Yes, Aisha, I think, look, the budget did indicate that there would be a change in the FY19 fiscal deficit target. But April to Jan fiscal deficit target is actually going to be overshooting. Now, there was a mention of that in the budget, so markets knew that the fiscal deficit target will not be met. So this has not come as a shocker. I think it's a quantum which we need to really look at now. This clearly means that, with one more month left, we would be way above what the initial fiscal deficit target was. The challenge, Aisha, now what happens from a market standpoint is that even though you overshot a fiscal deficit target, you've not been able to achieve what was desired, which is that the government spending has not been able to give you that initial kicker to the economy. And when the economy was looking, and when the macros were looking great, which is in 2017 and better part of 2016, you've not really managed to fix your roof when the sun was shining bright. Now, it's not a big shocker from the market standpoint, but this whole argument of how credible our numbers are in terms of fiscal management, I guess the budget told you that this would be coming, and now just an official documentation which has happened that April to Jan fiscal deficit now stands at 6.77. This is just Jan. The month of February and March are still left, which also means, Aisha, that historically what we see is an important quarter from a government standpoint. Q4 government spending increases, order books, they start increasing for all the companies which are dependent on government order. You may not see that big deep swell or the big bulge up which historically has happened in Q4.
And this continues to put pressure on the government borrowing, especially, Nikunj, in light of just the GST figures which have come in for the month of January, which has been a flat and muted growth as opposed to what was posted in the month of December. I guess this is a sort of dark hole. You don't really know what's going to happen with the government's borrowing plan. Yes, the budget highlighted that, and yes, this is just a reiteration of that figure. But this is a niggling worry, Nikunj.
Aisha, the bigger worry, frankly, if you ask me, is that what will happen to disinvestment if market conditions are not great? Because you've come out with a fat assumption for FY19, because this year has been great for government in terms of disinvestment and money raising, both in their new entities and both by the CPSC route and to the divestment proceeds. If markets will not do anything big, and if markets get into this limbo mode both locally and globally, then FY19 becomes very, very challenging. Your GST collections are not looking strong. Earnings just about picking up. You got a big fat recap you have to do for PSU banks. So it's just adding up. If I add up all the parts together, it's not looking like a great landscape, at least according to me. Maithili Pusunuman now joins us. Maithili, good afternoon. Thank you for joining us. On expected lines, but this clearly means that government may not do any extra spending in the remaining 2 months of the year. I mean, Jan and March will not look strong.
Well, absolutely, because we already have, to reduce the fiscal deficit number that we have, in order to get it down to that 3.5% of GDP by the end of March, we already have overshot considerably, because the year-end number, as well as the budget documents, should be 5.95 lakh crores, instead of which we have 6.76 lakh crores by the end of January itself. So clearly the government has a very tough call, and the month of March might see severe constriction of government expenditure.